November 2nd. We are about an hour and a half before the open. Let's do some technical analysis and see what the market is currently signaling. The momentum is very, very strong to the upside, but prices are getting overextended. Let's take a look at the 1OP indicator. We're going to have a longer term perspective in this video. I'm going to try and keep it to 20-25 minutes. You can see we're in a 2-hour time frame. Very, very strong, powerful, upward sloping trend line. So first thing that we want to do is GTC, grab that low right there, grab this low right here, draw our upward sloping trend line. That is a trend line that we want to see intact. What we'll be watching, and you can see how the 1OP indicator, here's how it works on a longer term basis as well as shorter term. We have a bearish cross, but the market keeps going up and we do not have a breakdown technically in the market. So as the indicator continues to come down, the market is continuing to go up. This is what we call a bullish divergence. Here we get a bullish cross right in here. And you can see how that was an excellent signal. Here we get a cross. This is a bearish cross off of a peak. And you can see how the indicator is coming in, but the market is able to hold its own. Now we get a bullish cross right in here, and that tells us this was a bullish divergence. Indicator down, market flat. Now we get a cross here. Now we're back in go-go mode, so we should continue to move higher. Now eventually we're going to get a bearish cross. When we get a bearish cross and the market starts to come in, then we know that the indicator is signaling a sell. We're going to go into a daily chart. I'm going to put up some indicators here. I'm going to take off the 1OP. It'll only be in the way while we're putting in other indicators. So I'm going to add some trend lines. You can see this is the most significant trend line right here, and it is coming into play all the way up here now at about the 344 level. This is also very significant here at the 337.50 level. This was the February high. We hit some resistance here. Now we've broken out. That is also a major support level right there at 340. So I can take GTC, click on the low end of that candle, double click, and there's another support line that I have. On the upside, the issue that we have is we've got an upward sloping channel right here. And if I connect this high right here with that high right there, you can see how we've poked through the upper end of that channel. Now when this happens, this is a signal of a buying climax, and that typically is going to run its course in the next week or two. I don't see any news that's going to really weigh on the market heavily. We've got ADP coming out in about 5 minutes. We have the unemployment report on Friday. Initial jobless claims have been above 1 million for the last 4 weeks, so I'm expecting a relatively soft jobs report. Is that going to really hurt the market? Market's been able to shrug that off. They see coronavirus subsiding, and the expectation is that the economic rebound is going to really start in earnest over the course of the next couple months. Investors are willing to look past that soft patch and focus on the future. That's what's driving the market, that and the fact that interest rates are at historic lows. But that doesn't mean that the market can't get overextended on a short-term basis. Just like it did back here, it was breaking through this upper band, and then we got the pullback. Well, we were in cash, and when this happened, we took position. So that was a nice entry point. That's simply what we're trying to do on a longer term swing trading basis right now. So we're trading the market to the upside on a short term basis. That means very short term bullish put spreads that expire within 2 weeks. We're also day trading from the long side. But the way that this market is probably going to correct is we're going to see a gap higher that's going to suck more bullish speculators in, and after about 45 minutes to an hour of trading, you're going to start seeing some long tails of body. You're going to see that daily 1OP indicator, on a 5-minute basis. You're going to see that roll over. When we start seeing those signs, then we know that we're in for a bearish reversal off of a gap to a new relative high. So that's what's going to be happening this morning, is that gap higher. I don't know that we're going to reverse today, but I'm certainly going to be looking for it. And so what happens is, as the market starts to sell off, you start to see very heavy profit taking, and bullish speculators who joined the party late are going to get flushed out. When they start selling, that triggers sell programs and it feeds on itself, and you get Very, very brief, but very, very steep corrections like this. And you may say, well, look at that. That only lasted 2 weeks. That's nothing. I'm not looking for this to last 3 or 4 months. I'm looking for this to be very sharp, very short, and to flush out a lot of that bullish speculation. And you can see here that the S&P 500 dropped about almost 300 points. So you went from 324 on the SPY down to about 297. That's a big drop. That is a big drop on a point basis. If we see similar right now, you're going to see a lot of bullish speculators take an incredible amount of pain. Be that on the bullish put spread side, when all these spreads start finishing in the money and you take your maximum hit on it, or for call buyers, because you get this drop here, even if you're long, longer term premium, and then you get a second wave. This move right here took about 3 or 4 weeks to play out. Well, that does an incredible amount of damage to very short term option trades that are a month or two long. All that time premium starts coming out of those options. So this is a time to be very, very careful. I could put up Bollinger Bands, and why don't I do that right now? I'm going to go into my studies. I'm going to go down to Bollinger Bands, and we'll click that and use a 20-day average and a 2 standard deviation. So we're going to put that up, and we'll use a blue center line here, and you can see how the market has been riding the upper end of this Bollinger Band. Well, it can do that for quite a while, and it has been doing that for about 5 days right now. You can see here how the market was riding that upper end of the Bollinger Band. Ultimately, that is going to lead to some selling. So do not be lured in to this go-go market where everything keeps trading higher day after day after day. Here's how you need to approach it if you are a short-term speculator. And let me be very, very clear about this next statement. This is a massive market rally. We are in a 10-year bull rally. We are in a 5-month bull rally. You do not want to start taking aggressive short positions. There could be a short opportunity here, but it's going to be brief, and you need to be super, super, super nimble, because when it runs its course and you're short, you get these snapback rallies like this. If you're short in here, that is going to be devastating. So you don't want to be shorting this market unless you're a very nimble short-term trader. Your best bet is going to be, as a longer-term swing trader, is to wait for that low, wait for a retest. Now you've got a downward sloping trend line right here that's been breached to the upside. We were selling bullish put spreads all in here very, very aggressively. That's the type of move that we want on a swing trading basis. The upside will be the way to trade this. Wait for that dip, be patient, reload, get aggressive when that support is established and confirmed. On a day trading basis, we absolutely are going to be taking advantage of this type of correction, because we're going to have some really great shorting opportunities that last a few days. So, how do I know which stocks are going to be great for shorting? Well, I'm going to show you how to find some stocks, and I'm going to go into a very simple custom search, and I'm going to bring it over, and I'll show you the search parameters that I used. I'm going to be looking for excellent option liquidity, and I'm looking for stocks that have a very strong ADX. That means that they are in an incredibly strong move right now, and I'm looking for stocks that are making a new 52-week high. So let's go through and let's take a look at some of these. You know the old adage, the bigger they are, the harder they fall. Well, the same thing happens to be true for stocks. And here's what we want to do. We do not want to be shorting very bullish stocks that are making powerful moves higher, unless they have really nice defined trend lines like this, that we can click on that low. We can click on that low. Sorry about that. I just clicked on the wrong bar. But we'll click on that bar right there. We'll click on this bar right here. There's your upward sloping trend line. If this is violated, we may have a nice shorting opportunity. Now I have an alert set on that particular stock. So I'm going to go through and I'm just going to click on these charts and I'm going to show you how to do that so that when these stocks start to roll over, we're going to have an alert. There's a GTC alert I've already set. You can see the big explosive move higher. When this stock rolls over, if it breaks that upward sloping trend line and I see relative weakness, I'm going to assume that at very least it checks that opening gap higher. If it falls below that level, it's probably going to fill some of this in. There will be a nice shorting opportunity for me. I'm just going to go through and do this on a bunch of stocks. DE. Look at this. You've got this beautiful long-term upward sloping trend line right there. Okay, if that's breached, I want to know about it. FCX. This is an exercise that all of you should be performing right now because we don't have the technical breakdown yet, but when it happens, it's going to be fast and furious. Now here, I've got a really nice trend line here. I don't want to start down here or here. I want to come right up and snug up to it because you can see how this stock has been moving very, very quickly to the upside. I think this is going to be a really nice short actually because you can see how tight this upward sloping channel is. Click there, click there. I'll do a couple more, and I think the next one I've got for you is GME. That one's actually just gone. Beautiful breakout there. Lots of strength in here. I don't know that I would want to be drawing any trend lines here. In fact, I can't. There's nothing that sets up well. The trend line would be down here. But if you wanted to, you could take and you could click right here. And I'm going to put GTC, and I'm going to double click on the low of that candle. And that kind of coincides with that high right there. So if this is breached, that's a failed breakout and it could come back in and retrace. I'm going to go to the next one, Google. Google has been pretty orderly. It's not gotten too far ahead of itself, but we're going to click here and we'll click there. I'm looking for the ones that have really gotten overextended. JD, here you have a stock that's broken through this horizontal resistance, has really been strong here. Pick out a horizontal point like that one right there, and that should hold. If it starts to come in, that's going to be a failed breakout. You're going to be able to catch that when it breaks this. That's going to be a stock that's going to roll over on the backside. That's the practice that you should be in right now. Lulu, boy, this is another nice one. Look at that move right there. Click right there. There's my upward sloping trend line. So when the market correction or the market pullback does happen, I'm going out and preemptively drawing these good till cancel upward sloping trend lines on a daily chart. As I'm trading and when I'm watching the market come in, let's say that today's the day that we get that gap higher, all of a sudden the market runs out of steam. We start seeing some heavy selling pressure. We get a full-blown reversal with sell programs kicking in. All of a sudden, these stocks that have been forging their way higher start to soften. They start to roll over. Now we get follow through for another day or two. Boom, boom, boom. I start getting these alerts on the platform that tell me, hey, this stock is making a significant move through this price level. Take a look at it. Do you want to short it? And the same thing has been true on the upside. We've been doing the same thing, except we're drawing downward sloping trend lines when the market was heading lower. As the market bounced, we were triggering those upside alerts and finding fantastic trades. Once you look at a chart, it only takes you a second or two to drop one of these alert lines. It is time well spent. So, a couple things you need to watch for right now. Let's go back to the market. You want to watch for late day selling. So let's say that the market rallies up. It's a nice day. Everything looks good. We're challenging the high of the day, making a new all-time high. And then boom, boom, boom. In the last hour of trading, you see heavy selling and you see a lot of those gains stripped away. That's a warning sign. That is a sign of profit taking. The market has been able to float higher on very, very light volume. I characterize this as a seller's boycott. So it's just floating higher because there hasn't been any news to drive the market, and sellers have been pretty reluctant. So any bid fuels the rally. So that's one thing that you need to be aware of is late day selling. The other is an opening gap higher that lures bullish speculators in, and then they get the door slammed and you get a full-blown intraday gap reversal closing on its low of the day with follow through overnight and selling the next day. That's the type of price action that starts flushing out all these bullish speculators, and that selling pressure feeds on itself. It could be very, very deep, very, very painful. So if you've got longer term swing positions on right now and shorter term swing positions, it's okay to be nimble and to be able to trade in and out of positions during the day, but if you can't watch the market intraday, tread very cautiously in here because this is the type of move that can really throw a wrench into everything. Your absolute best trade for those of you who are going to exercise patience is to wait for some type of pullback. This pullback does two things for us. It allows us to gauge the selling pressure, and it allows us to gauge the appetite for stocks. It allows us to gauge the buying pressure. So in this particular instance, you get the drop, you get the retest. Okay, this is a nice entry point. Which stocks have been holding up really well during this pullback? Well, that's when you know you've got the real McCoys, and when the market rebounds, those are the stocks that you want to be in. Those are the stocks that are going to be leading the charge higher. But until you get that type of move right here, everything's moving higher. And you've got a lot of stocks currently that I know are all fluff, but they're moving higher. Maybe it's short, too heavy a short interest, and those shorts are being forced to cover. But there are a lot of fakes in there, I guess is what I'm trying to say. The real McCoys are going to hold their bid very well when the market has one of these moves. So we need to wait for that. I hope this content is helping you. You know, I've been super cautious during the month of August. I've missed the best August in 30 years from a longer term trading basis. So yes, you could argue, what does this guy know? He's missed this move, but I'll tell you, I've had one of the best trading years I've had in a very, very long time. We caught the run up through February, we caught the big sell off through April, we caught the rebound. So this is a natural point for me to pause, and I know this type of formation is a buying climax. We just have to let it run its course, and we have to watch for those warning signs. Please give this content a thumbs up if you like it. Please subscribe to the YouTube channel. Turn on your notifications so that you never miss these videos. Thank you. I hope this lesson helps you. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.